Making money while you sleep is probably everyone's dreams. No more dealing with idiotic bosses or worrying about pointless social interactions. Imagine not having to work, yet seeing money automatically flood into your wallet daily. So in today's video, I will show you how to generate passive income quickly using your own currencies. I will explain the methods and potential risk, recommend legitimate platforms, and provide detailed step-by-step tutorial for each platform. You will find this manageable even you are beginners or grade school students. If you are interested in passive income or want to see your assets grow steadily, I suggest you watch this video. I believe it will be extremely helpful for you. So, hello everyone, welcome back to my channel. Today I'm introducing a method called interest earnings through lending. I'm sure that many of you are familiar with this term. In our traditional financial work, we can deposit our fiat currencies in the bank, either a savings account or a fixed deposit, to earn passive interest income. So what you see on the screen now is depicts how banks use our deposit money. Let's quickly review it. So each of us is a consumer. We deposit our idle funds in the bank, whether in the saving account or fixed deposit, and earn a certain amount of interest. And the bank doesn't just keep the money, it lends it to those need loans. And borrowers provide valuable collateral, and the loan amount is always less than the values of the collateral. The borrowers pays the interest we earn, and the banks earns and profits from the difference in interest rates, which can be quite substantial. But in reality, the interest rates in banks are regulated by the government. For instance, if the government set the interest rates for savings at 1%, we can only earn 1% on our deposits, regardless of the interest the bank charged the borrowers. Even though depositing money in a bank involves some risk, it is minimal. So the risk arises because borrowers can use the money for business purposes. The collateral is auctioned if they fail to repay it due to bankruptcies or unwillingness. The value of the collateral can fluctuate, and if it sells for less than expected or not at all, the bank incurs bad debt. This is the bank's risk. So for depositors, most banks ensure the interest payments because the amounts are relatively small. However, the biggest risk is the accumulations of bad debt, which could lead to a bank's failure. If a centralized bank collapses, our deposits can be lost and irrecoverable. This scenario explains who earns our money and the risk involved when depositing in a traditional bank, where the central bank sets the interest rate. So now let's compare this with the borrowing process in the cryptocurrency world, where the market determines interest rates. This is why even participating in flexible deposit in cryptocurrencies can get higher interest rates than traditional banking. So the flow chart you are seeing now is quite similar to the borrowing process in the real world. Users deposit their principals into the cryptocurrency exchange to make loans and earn interest. The exchange then lend this money to borrowers. In centralized exchange within the crypto world, borrowers use the funds for trading contracts, taking loan or short positions. Their collateral is also held within the exchange, so they will unlikely default on their loans. So users earn interest from fees, and the interest rate are entirely controlled by market supply and demand. So this often results in seeing analyzed rates of returns for flexible deposits that can reach well into the double digits. And of course, there are associated risks. So firstly, exchange can failure. So if a centralized exchange collapses or runs away with the funds, the money you've deposited will likely disappear. If a borrower defaults, they can liquidate the collaterals for the exchange. So the collaterals in the crypto world typically consist of mainstream cryptocurrencies like Bitcoin, Ethereum, and Solana, which have high liquidity, often better than real estate from my perspective. Therefore, centralized exchange can usually avoid bad debts by liquidating these assets in case of defaults. Then let's compare the interest rate in real world. So in traditional banks, interest rate are set by central banks or governments. Currently, we can see that the savings interest rate in the US can reach 4% to 5% annually, but in Japan, it is less than 1% and nearly nothing, and in most other countries, it is below 2%. But in contrast, the interest rates for flexible deposits or crypto exchanges usually stabilize between 5% to 10% annually. Even in a bear market, annual yields can exceed 10% or even 20% during bull markets, which is quite substantial. Based on this information, our strategy is to allocate a portion of our funds with a low-risk preferences to reliable, large, and well-established centralized exchanges to earn stable interest incomes. So this aligns with what I introduced at the beginning of the video, earning passive income even while we sleep. Our strategy is essentially a low-risk passive income because it doesn't require active management. We lend out our cryptocurrencies to earn interest incomes, and the assets lent are stable coins like USDT and USDC, which have minimal volatility. As we can see here, the yellow one is advantage. So the advantage of these stable coins is their high liquidity and one was one pegged to the US dollars, ensuring no price fluctuations and easy conversion to other cryptocurrencies. And the red area is the disadvantage. And the downside is that stable coins don't appreciate, so we only earn fixed interest incomes in the bull markets and no additional capital gains. This is suitable for those with a low risk appetite or large capital investments. So after explaining the strategy's essence and operations, let's discuss its associated risks. So there are two primary risks. First is exchange platforms risk and stablecoin risk. We will look at each one. So firstly, platform risk refer to the risk of the centralized exchange itself. Just like banks in the real world, exchanges can also fail. So numerous exchange failures have occurred, such as the recent collapse of FTX and the earlier MTGOX instance. We must remain vigilant about platform risk. So I have two suggestions to mitigate this risk. First, regardless of the interest rate, choose exchange with a long operational history, transparent funds, and significant scales to execute our strategies. And second, diversified funds across 2 or 3 largest exchanges to minimize single point failure rates. If one fails, at least 2 others remain intact, protecting your investment from total loss. And additionally, if you notice any significant negative news about an exchange, withdraw your funds immediately to ensure the safety of your assets. You can always reinvest once the issue is resolved. So now let's look at the second risk, stablecoin risk. So USDC and USDT are centralized stablecoins issued by companies and are subject to centralized regulations and operational risks. To mitigate this risk, always stay informed about stablecoin developments. If you detect any risk or depagging, immediately sell the stablecoins for another stablecoin of your currency to avoid losses. So once the risk subsides and stabilizes, you can buy back the stablecoins. In conclusion, protecting your principles is paramount. Whether you are investing in the crypto world or elsewhere, always keep this in mind. So here I recommend 3 exchanges: Binance Exchange, Bitget Exchange, and OKX Exchange. These 3 exchanges are among the top 4 in the crypto world, known for their long-standing operations, regulatory compliance, global prominence, and user-friendly experiences. And in a moment, I will demonstrate how to operate risk-free lending on these 3 exchanges step by step. And if you want to engage in low-risk lending in the crypto space to earn interest and post-tax interest, you will need an account on these 3 crypto exchanges. If you haven't registered on these 3 exchanges yet, you are much welcome to use the registration links provided below in this video to register on Binance and Bitget exchanges. Using these links, you will get a permanent 20% fee discount on Binance and Bitget exchanges and permanent 20% fee discount on OKX exchanges. So after registering through my link, you will enjoy the lowest fees available across these platforms. So before we start the demonstration, let me share a website with you, Defilement. You can see the URL here, and you can directly visit this website to check out the information. When you visit Defilement, you will find the sections on the left navigation bar labeled CEX Transparencies, which shows the transparencies of centralized exchange components. So here you can view the self-disclosed assets transparency of exchanges like Binance, OKX, and Bitget. This allows you to monitor their daily, weekly, or monthly changes. If you notice significant negative trends, such as a larger scale reductions or flights of funds from this exchange, it is a signal to exercise caution or temporarily withdraw your funds. So now let's begin with the first exchange, Binance. As the world's largest cryptocurrency exchange, Binance offers excellent liquidity, securities, and brand reputation globally. It is also user-friendly for beginners. So on your screen, you can see that we are access the Binance Exchange mobile app. To engage in lending with USDT or USDC from your account on Binance, first click on More, then find Earn session within the menu and click on Earn to enter the Earn sessions. So from here, we can see that investments are categorized by risk levels such as low risk and high yields. So here we select low risk. And within the low risk categorized, focus on flexible instead of locked options because this option is like fixed term option. So under the flexible list, you will find USDT and USDC options. So currently we can see that the annualized interest rate for USDT is 2.92%, and for USDC it is up to 6.24%. In the current market conditions, these interest rates are quite substantial on day. So let's take USDT and USDC as example. So first click here on USDT. So after clicking, we can see 2 products. The flexible plans offer an annualized yield of 2.92%, and the fit plans over 21 days offers 2.3%. So clearly the flexible plans is the better choice. So now we enter the amount of USDT we want to deposit. Currently I have 18 USDT available, and say I want to deposit 10 USDT. So after entering 10, we can see below an overview based on the 2.92% annual yield, showing an estimated daily interest of approximately 0.0007 USDT. So if everything looks good, we click convert. Now we can see that I have successfully deposited 10 USDT into the flexible account. Here we click to go to Earn Wallet. So for here, we can view our Earned account where we can easily see our holding of USDT flexible products. So similarly, the process for USDC is the same. Click More, then click on Earned, choose low rates, and now select USDC. So we are now on the USDC subscription page. There is only one product available, and the flexible plan is at 6.24%. And for here, you also offer tiered earnings totaling 6.24%. So the first part is the real-time rewards and the second part is the bonus tied rewards. So now let's click on real-time rewards. So after clicking this, we find that the real-time borrowing rate for USDC is 2.22%, but we are offered 6.24%. And now by clicking daily bonus tied rewards, we see it is structured this way. So the 6.24% rate combines the real-time annual rate with the tied annual returns, effectively a subsidy from Binance to attracting new users. So we can see a tile here. For 0 to 500 USDC, we earn a 4% annual interest rate. This means if we subscribe to this product with less than 500 USDC, we earn a 6.24% annual yield, which includes the 4% subsidized returns plus the market's real-time rate. However, if you deposit more than 500 USDC, you only earn the real-time market rate. Now that we understand this, but I can seed money in my account but no USDC, next I will show you how to convert USDT into USDC and invest it in Binance Earned. So first, click on Trade at the bottom, and now click on the trading pair in the top left corners. And for here, choosing USDC as the target for the USDT pairs. After clicking, we enter the USDC trading page and see I have 8 USDT in my account, and I want to buy 8 USDC at market price. I enter 8 in the amount and click buy USDC. Okay, the order was successfully placed, and I have 8 USDC in my account. So let's return to the earn page, click earns, then USDC. Now I can see I have available USDC in my account. I entered 8 in the amount and saw the oval below, which shows a real-time rewards of 0.004 USDC daily and a bonus tier rewards of 0.008 USDC daily. So if everything looks good, I confirm by clicking convert. Okay, we can see that I've successfully subscribed to the USDC flexible and products on Binance. So for here, if you don't have a Binance account yet, feel free to scan the QR code on the screen or use the link below the video to register and enjoy the premium 20% discount on trading fees, the lowest across the entire network. So apart from Binance, let's look at the world's second largest cryptocurrencies exchange, OKX. OKX is also a well-established and secure platform. If you haven't signed up for OKX yet, use the link below the video to register and enjoy the premium 20% discount on trading fees. So now let's move on to OKX app. Inside OKX, there is a feature called Simple Earns, where you can use stablecoin to earn interest. So first, click the Grow button at bottom navigation bar, click on Growth, and now we can see the Simple Earn here, click on Simple Earns. So we enter the page where products are categorized into all products, flexible, and fixed. I recommend focusing on flexible ones, so just ignore the fixed ones. Under flexible, we can see products for USDT and USDC offering a reference annual yield of 10%. Isn't that high? It also mentions platform bonus. Let's click to learn more. So clicking on USDT, we are taken to the subscription page where we see the actual annualized interest rate is only 3%. Is OKX trying to deduce us? Let me tell you, it is not like that. Here we can see the reward rules below, which actually have 2 levels and 2 parts. For here, we can see the first level is for amounts less than or equal to 1000 USDT, where the platform gives a 10% annualized reward. This means OKX subsidize us for using the lending interest earning features, specifically targeting small and new users who prefer lower rates. However, amounts exceeding 1000 USDT will only earn the real-time fluctuations market rates. Currently, the market rate is 3%. So now let's click on historical APR. For here, we can see the average market borrowing rates per hour to date and will raise weekly, monthly, or yearly periods. So if everything looks good, we want to deposit money, we simply enter the amount of USDT we want to deposit in the subscription amount field, which is here. For example, if I want to deposit 10 USDT, I just enter 10 USDT here. So after entering the amount, there are no problems. We can see below that the interest accrues from 8 p.m. to date and interest payments are made at 9 p.m. Also, OKX issues interest payments hourly, which is very flexible for retail investors. Once everything looks good, we click to agree to the relevant agreement below and then click subscribe. Okay, now we've successfully subscribed to the USDT flexible saving deposits. And similarly, beside USDT, there are also USDC products, so click on it. Here we can see that the current market rate for USDC flexible deposits is 1%. Similarly, as long as the amount you deposit is less than or equal to 1000 USDC, OKX also subsidize you with a 10% reward. So we can actually have a very good strategies, which is to divide our funds into 2 parts because both USDT and USDC are reliable. We can own 1000 USDT and 1000 USDC respectively, deposit that into OKX and earn this 10% risk-free passive income, which is very safe. This way, we can maximize our profits. Of course, other assets like Bitcoins, Ethereum, OKBits, and SHIBits also receive platform subsidies. However, since these 4 assets are volatile, we may incur losses after purchasing them. Therefore, I only recommend participating in activities in both USDT and USDC. Compared to Binance, OKX is quite generous in this regard. So now let's look at the third exchange I recommend, a more established and largest one, Bitget exchange. If you haven't registered registered for Bitget exchange yet, feel free to scan the QR code on the screens or use the link below the video to register. You can enjoy a permanent 20% discount on trading fees using the link or QR code. This is very important for us when trading cryptocurrencies. You can see on the screen that we already entered the Bitget exchange app. Within Bitget exchange, there are more diverse ways to earn risk fees or passive incomes. First, after entering the homepage, click on More. In the More section, you will find Earn. Click on it, and within the Bitget exchange, there is definitely a product for earning interest by holding coins or stablecoin lending. Here, it is called Simple Earn as well, and click on it. So inside Simple Earn, we can see the option for Simple with USDT, and at the bottom, there is also Simple Earn with USDC. Let's take USDT as an example to see how to use Bitget exchange Simple Earn, which is essentially an interest rate lending. So first, click on USDT. For here, we see savings. So there are two types: a regular one that everyone can use, and the VIP ones that we don't need to worry about. So click on saving. So now we've entered a page for earning interest on USDT deposits at Bitget exchange. We see that the current flexible deposit interest rate is 8.35% with maximum balance right next to it. Let's scroll down to see the rules. There are two levels. The first is from 0 to 500 USDT, where you can receive a subsidized 8.35 annualized returns. The second level is when your deposited amount is equal to or greater than 500 USDT, where you will only receive the real-time borrowing rate in the market, which is currently 3.35%. So clicking on 7 days APR trades. So from here, we can see the recent USDT borrowing rates in the past 7 days. Once everything is fine, we can enter the amount we want to subscribe to in the subscription amount field. For example, if I still want to subscribe to 10 USDT, I just enter 10. At this point, the subscription times, start times, and payment times will appear below. For here, when we are sure everything is fine, we agree to relevant terms below and click subscribe now. For here, we can see that we've successfully subscribed to a raise fees and products for 10 USDT at Bitget exchange. So USDC product was the same. Lastly, a reminder about risk. I recommend choosing one of the 3 exchanges I've mentioned, or you should try to choose exchanges with a longer duration, transparent funds, or larger exchanges to ensure safer deposits. Always diversify your funds to avoid single point risk, even when using a larger exchange. And finally, let me summarize and share with you how beginners can use small funds to earn a relatively stable passive income in the crypto space. As we just discussed, there are 3 exchanges: Binance Exchange, Bitget Exchange, and OKX Exchange, each offering official subsidies for USDT and USDC. These subsidies are very reliable. At Binance Exchange, USDT does not have subsidies, while USDC have an annualized rate of 7.1% for a month up to 500 USDC. At Bitget Exchange, the annualized rate for USDT is 8.47% for a month up to 500 USDT, and for USDC, it is 8% for a month up to 1000 USDC. So at OKX Exchange, USDT and USDC have an annualized rate of 10% for a month up to 1000 US dollars. So adding it all up to 1000 a month and to 500 a month total 3000 US dollars. This US dollars limit is actually quite suitable, not too much to be overly concerned about risk, yet not so small that you won't earn much money. Therefore, you can follow this route to deposit your funds into these 3 exchanges separately to maximize your annualized returns. After purchasing these products, it is also important not to just leave them unattended. I recommend always keep an eye on these platforms and stablecoin information. If there are any risks, address them promptly to avoid losses. That concludes this video. If you find it helpful, please like, share, and subscribe. If you have any questions, feel free to leave a comment below. Thank you, and see you in the next one.